Hey everyone, and welcome to the video on trading Forex here in Australia. Forex, if you're not familiar, stands for foreign exchange, foreign currencies, and it's actually one of my preferred things to trade. I do trade stocks, but do trade Forex a little bit more, only because the market's generally 24/7, fits into my lifestyle a bit more now, and hopefully it's something you enjoy after learning from this video. But before we kick into the content, check out my boot camp that I've got running. This is for those guys that have always wanted to learn about trading but have been a little unsure, and it's dipping your toes in. It's going to show you how to be a successful trader over a 30-day period. You'll access all the information immediately. It's up to you how quickly you can do it, but do it in a linear way, and it's going to take you from zero to successful trader in 30 days, as well as give you all the introduction stuff, as well as starting to move into some of those more intermediate topics. Now, if you've been trading for a little bit and you want to take things to the next level, click the link below on the 10X Trading Academy. That's where you instantly access a portal of education. You can jump on, you can be learning my 7 strategies that I consistently use to generate profit and income from the share market, as well as a foreign exchange market. So that's a 10X Trading Academy. Jump on that now. Forex. Okay, so this is a real introductory video. I'm not going to go into a lot of detail about the strategies, but I'm going to show you how it works so you can start using this as another resource. Particularly here in Australia, our market generally is a lot slower. It might move by, 0.2% or 0.5% or something outside of COVID when things aren't crazy. So the foreign exchange market is something that's opened all the time, and you can make some seriously good money on it. So if you're working full time and you can't quite trade the stock market because it's open 10 a.m. to 4 p.m., this could be a really good alternative because you can jump in after work and you can still be making money. So let's pull it up now. We're going on IG Markets. I've got the demo account here, something I recommend you guys jump on and play around with when you're starting out trading. We go to FX, and what it's going to bring up is all the currency pairs. So that's the first thing to learn. With currencies, you're trading against different countries. So Australia, US, the British pound, the US, the Euro US, the US, the Japanese yen, the Euro, the pound, so forth and so forth. The reason it's a little different to stocks is you're just looking at one particular company. You're going to buy thinking that that stock's going to go up and sell it at a higher price, or you're going to sell and buy it at a lower price if you're shorting a stock. It's all about that one particular company and whether it's going to go good or bad in the future. However, currencies are going in pairs. So you might have a look at Australia and you might have a look at US, and they could both have a really prosperous future. However, we might find that Australia's future from an economic point of view is a little bit better. So what happens is the Australian dollar increases, and if the Australian dollar increases, the US dollar automatically decreases in this exchange. And the opposite's also true. If the Aussie dollar goes down, the US dollar is going up in that exchange rate. So what this means is we have our pair here. We go look to our right. It's currently selling for 74.24 cents, and you can buy for 74.25 cents. The difference between those two is what's called a spread. I'll touch on that in a little bit more. So we've got that 1 point difference. So if we buy now, it's going to cost 74.25, and if we sell 74.24. That's because you don't want to buy and sell straight away and make a profit. You can do that with some platforms, but generally not here. So that's how the basis of this works. We've got our major pairs here. And then if we start to look down, this is where we get some of those crossovers. So, we're having a look at the British pound against the Canadian dollar. Very, very unusual kind of currency that you trade there. You generally stick with the majors. And in fact, 80% of my trades in the Australian US because I know the fundamentals of the countries. I also know the charts really well, and it can be very profitable just mastering 1 or 2 of those. So if we pull this up now, we're going to pull up the chart. Everything looks the same as stocks because we've got the same charts. Everything else applies. It's just understanding some of the nuances as how things are bought and sold. Again, each one of these bars, we've got the 1 hour set there. So this is 1 hour per bar, and we've got the volume down the bottom as well. So again, in this period of time, we can see that the price started here at 74.04 and it's closed at 74.24. So that means the Australian dollar has gone up against the US dollar. And remember, because we're going in pairs, that means that the US dollar has actually gone down. So what that means is that we can now get a better exchange rate, or we're getting closer to that parity, to that dollar for dollar. We have much higher buying power. And as this gets up, just generally from an economic point of view, it means that our imports are a lot better. So if this gets to $1, it means that we can import stuff over to America, and it's a 1-for-1 exchange. Whatever this is sitting at 0.50 cents, 50 cents, it means we almost have to pay 2 to 1. It also means that the US would be a cool place to travel, right? Because if they're charging $10 a beer, it means it's $10 Australian. But I've had friends travel over there when it's been 50 cents on the exchange rate. So a $10 beer over there is really costing you 20 Australian dollars. But that's very much by the by. Now, there's a really important thing with the foreign exchange markets, and I'm going to pull up a different pair here, and I'm going to pull up the pound US to give you a good idea as to what I mean with this. Now, the time zones are really, really interesting, and I'll pull up the world clock here. This is going to show us exactly where we are in the world. Actually, might hit refresh on that because it looks like it's a bit old. This is the current time here in Sydney, where I'm trading from. New York, 12:25 a.m. in the morning. London's 5:30 a.m. and we've got Tokyo, 2:25 p.m. So why is this important? It's because the volatility and the amount of people getting into the market changes at different opens. So we have a look at London. And to give you an idea, most trading platforms, particularly Yahoo Finance, they're all set at London time, which is GMT. Forget what the acronym is now off the top of my head, but they're all set at this London time. So the London market opens at 8 a.m. So it's currently 5:30 in London. So it means it's 2.5 hours away. So 2.5 hours in Australia means that 7 p.m. in Australia time is when the London market opens, which is really cool. Again, if you're trading for a side income and you don't have time to trade stocks during the day, well, 7 p.m. at night is actually when there's a lot of activity happening on the market because it's a global exchange. It's worth more than the stock market. It's about $4 trillion traded, per day. And it's traded 24/7. Like this doesn't close because there's always something going, New Zealand opens, Australian opens, Asia opens. These start to close, but London opens. And you can trade these because they're not attached to any particular stock exchange. You can actually trade them at any time. So London can trade Australia. Australia can trade US stocks even when the US market's closed. It's just when these open that, a lot more professional traders are jumping on, and that's where we see a lot more volatility and a lot more exciting stuff. But we know here that around 7 p.m. is when London opens, and New York opens at about 8 o'clock as well, which is another 7.5 hours. So that means it's about midnight as well. So that's where we get a lot of action. So that's where this day trading for a side income can be really cool in Australia. So I want to show you something really cool. So this is 1 hour bar, and we've got the time right down the bottom here. If you see where my mouse is, it says Tuesday, 8th of December at 4 p.m. What we want to do is we want to go back and find 7 p.m. on the chart. And this big red bar here is Monday at 7 p.m. If we look down the bottom, it's lined up there. There's one key piece of information. Look at the size of that bar. Look how much it moves when London wakes up. You have a look at all the bars before it. This is kind of that pre-market of London waking up. We have a look at the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's the Australian trading day. You have a look at how kind of quiet that is during the day. And then London wakes up and we go bang, bang. 2 massive bars moving it in an opposite direction. Now let's go across and see what happens when New York wakes up at 12 p.m. And you've guessed it, we've got a solid green bar here, and it pushes the momentum back up sort of until they close. And then Australia goes again with small bars. So that's why it's really interesting. You can see a lot of these overnight countries coming involved. So during the day, you're not actually missing a lot of action here in Australia because the US and UK are actually asleep. So they drive a lot of the activity. 7 o'clock hits at night, and that's where they absolutely go crazy, and you can make some good money in that period of time. So that's one of the great advantages of Forex. Get ahead in your day job, you can jump on here and you can trade after hours. So the premises are still the same. All the trading strategies that I showed in my previous videos, they generally apply here when we're looking at our levels of support, resistance, and Fibonacci and moving averages. They all apply here. It's just some of the nuances that I'm going through here today. So when we're buying and selling, it's a lot different because what we're focused on here is the 4th digit after the decimal point. So we've got 3353. This number here is what's called a pip, and that's what we're looking to gain. Everything in Forex is all about gaining as many pips as you can. The 5th number over here is what's called a pipette, but we're focused on number 4, and that's a pip. So we want to accumulate these as much as we can. We want to have a target of 10 pips per day, 20 pips a day, 50 a week, 100 a week, 1,000 a month, whatever it is. We're all about accumulating them. So how much is a pip worth? Well, let's go onto this buy button here. Let's say we think the pound is going to rise against the US dollar. And what we're going to do is we're going to buy one single contract. Now, everything is done in contracts in foreign exchange. The reason is because this is actually worth cents, pennies, if you will, because we've got, this says $1.33. And if we're collecting that fourth digit there, that is literally micro cents. So this works on contracts where you times it by 1,000 to actually make it worth something. And we have over here, a contract is a minimum of 1. So if we buy one contract, that means that 1 pip is $1, $1 per point. So again, if this goes 13354, if that goes 13356, the difference between those two, it's moving because it's a live market, is generally 2. We've got 155, 157 over there. So that's 2. That's $2 is the difference. So, you know, if this goes 133, from 133.55 to 133.60, that's 5 pips difference or 5 points. So if we do our analysis and we're buying in here at 133.55 and we think that it's going to go up to 135, then we're actually going to make a decent amount of money. Let's see what happens when we put in our limit order. Let's say we put in 100, or we'll see if we can hit closer to that. We say it's 150 pips away. And we put our stop loss in at 150 pips as well. So again, we've got that amount that a pip is worth based on the contracts that we want to buy. So that's based on one contract, that's 1 point. And if we have a look down here, it says there that it's $150 if we hit it, or we lose $150 if we get stopped out. So it's calculated. Now, this is the margin that we need to control that. So for $90, we can get into this trade, and that's the margin that we'll need. So if we want to increase it, we can actually go 2 contracts with this. And now it's worth $2 per point. So it's still all about collecting those pips, right? So it's still moving 150 pips, but now we're making $300 profit. Well, what happens if we go 10 contracts or $10 per pip? It's $1,500 that we're making. So again, see why the focus is all about collecting these pips. It's because if you can consistently do, let's say 100 pips per day, you can start out in a small account where that's $1 per pip, so it's $100 a day. And as you build your account, you can actually go up and you can be earning more. And then you can even do 100. So it's going up to 15,000, and you can go up to $1,000 per pip, which is next level. That's $150,000. You know, imagine if you shorted that here back in 5th of December, 3 days ago, and you got to your target, $150,000 in 3 days. So that's why it's really cool. But all that risk management stuff that you learn, that I teach, the maximum risk of 2% on your account absolutely applies here, because you don't want to get caught up. And you don't want to be doing $1,000 per point, because you can see here you can lose money quickly. You also have to have a certain amount in your account to be able to do that. Generally starting out with $1 per point. So with the risk management rules, if the margin is $90, you want the margin to be about 10% of your account. So for us to place this trade, we would need at least $900 in our account, because our margin required is $90. So we want to have 10 times the amount left over. So we need at least $900 in our account. From a risk management point of view, if we do have $900 in our account, then the most that we'd want to risk is 2%. So we'd only want to do 18 pips, because that's all we're happy to lose is $18 on that 900. That hits our area. So as you can see here, that's not actually a lot of movement. That's very, very tight. So this means that this is potentially out of our area. So what we're going to do is flip over to another trading platform. And this is really, really good because they just specialize in foreign exchange, and it's called FXCM. Based out of the UK, you can register for it in Australia. And this gives you a bit more flexibility. So if we pull up the pound US, and we'll go the same, we're going to buy again. What this actually has is a micro account. We can see here that if we buy one contract, it's actually only 13 cents a pip. Whereas if we go back to IG markets, remember it was going $1 per pip. Well, FXCM means that it's 13 cents per pip. And the reason that that's better is because we want to have that flexibility to give us a good target and a good stop loss. Because if we place this trade right and it's $75, that may blow our account. You know, even if we've got a $1,000 account, that's still 7.5% on one trade. And that's just way too much for us to be getting into that trade with. However, if we put this into pips here, we can afford to place that trade over on FXCM because it gives us that flexibility. We can say that, you know, we want to risk 75 and we also want to take profit when there's 75 there. So it comes up here and it says our stop loss, our limit is $10 and we risk $10 as well. So that's much better. That fits a lot better with our profile. So we could get into this trade with only a $500 bank account, for example, because if we get stopped out, it hits our 2% rule and the margin is calculated there as well. But what happens is you go up in increments. Once you get used to 13 cents per pip, you can go up and you might double it and might say, I'm going to 27 cents per pip. And then you might buy 5 contracts when you get more confident and you're going to 67 cents per pip. And then you go all the way up till you're super confident and an amazing trader and you're doing $13.50 per pip on this. Now, that pip price depends on what you're trading. So if we go back and have a look at, let's say, the Australian US, we can see that it's 13 cents per pip. And we scroll down, 13.47, so it stays the same. It does change on different currencies depending on what you're aiming for. So that's what you'd be doing on a micro account. Again, if you think the Australian dollar, you think something's happening in Australia that's doing really well, and it's not so great in the US, that's where you're going to buy the Australian dollar against the US. Doesn't matter what other countries are doing in the world, you just focused on those two at the time. Interest rates are always really, really strong indicators for foreign exchange. If a country increases their interest rate, then their currency goes up. That's because it's really appealing for other countries to take their money and to put it into bank accounts. So more money that we put into an economy means that there's greater supply and it's going to increase, increase the money in there, but it's greater demand for that interest rate. So increase in interest rates means that the dollar is going to go up. So if you're looking at it and US is decreasing interest rates, Australia is increasing, then you want to go and take a long position on the Australia-US because you think that it's going to improve over a certain period of time. So that's the basics of trading foreign exchange in Australia. It's my preferred one only because my day job's quite busy building the business and getting content out there, which means that I'm generally left to trade sort of in the evenings, and that's when the foreign exchange market is really taking off. And as you see during the day, there's not a lot of differences. Comment below if you have any questions. This can be a little difficult to pick up at first, but I guarantee with a bit of practice and a bit of finesse, you'll be able to understand it. Yes, it's something that I cover off in the 10X Trading Academy. I touch on it slightly in the boot camp. The boot camp's more specific to the stock market, but 10X Trading Academy, I go through and show you how the foreign exchange market works, how to place trades, and give you a bit more context around it. But today was really an introduction on day trading, the foreign exchange market here in Australia.